Good morning, everyone, and happy Monday. We are set for a very important, wild, and volatile trading week as we have some of the largest companies in the entire market set to report earnings this week. At the same time, this is coming from a pretty big drop in the markets last week. And then I believe in a week or two, we have the FOMC meeting on May 4th. So we're set for a lot of volatility. So far this week, the market is just pretty flat. But Tom, it's going to be a crazy week.
Yeah, nothing too crazy yet. But as you know, these big earnings coming out are going to make the market go nuts. The good thing is that Twitter stock had a nice explosion this morning, of course, with Elon Musk news and everything like that. We're also seeing Coca-Cola, Mike, exploding back up on their earnings today. I know they reported this morning, so that's pretty interesting. Activision also reported, and they are slightly down. But as we know, Activision is actually in the process of getting bought out by Microsoft, so don't expect too much action with them. But Coca-Cola is actually doing quite well, Mike. I'm actually seeing AMD popping up this morning, too. Looks like they're flying back to the upside, so good to see the chip plays moving so far.
All right, there we go. Looking at the market so far, there's definitely a lot of red. We're definitely seeing, sadly, a continuation from Thursday and Friday. It looks like these China stocks are getting hit especially hard. Check out Alibaba, NIO, and a couple other ones. Alibaba is down like 5% today, trading lower by the minute. And it is almost getting towards those lows from like March 15th.
Wow, it is, Mike. It's almost back down to those lows of the past few years. That's definitely not good to see there. Man, you're right. These China plays are like leading my watch list to the downside. I even have some of these oil stocks, Mike, falling off the table. Look at Exxon falling off. We actually have Oxy falling off as well. I know Warren Buffett's going to be very upset about this, Mike. I remember he was doing pretty good the past couple weeks, but man, the past 3 days, oil has just shot back to the downside, which is, I guess, good. You know, it's good and bad. You know, crude oil's back down to 95. It'll be good for gas prices, but obviously it won't be good for these oil companies. It's just, Mike, we're seeing so much selling pressure. Even some of these solar plays / like clean energy, like RUN, different stocks like FSLR, different stuff like that, down really big today. Enphase too. So yeah, definitely a lot of selling pressure again. But I do feel like, Mike, we're still very early. Something could still turn around, but as of now, it's definitely red.
Yeah, no doubt about that. And check this out. This is actually pretty interesting. So you kind of already said this, but like check out Crude Oil Futures. So the market's tanking down, but at least lately, a lot of times when the market tanks down, like commodities tend to go up. But that's not the case today. Crude oil futures are getting destroyed. Even check out like gold futures or GLD, the ETF. That is getting pummeled too. Even silver, like /SIL or SLV, that's tanking a lot too. Even if we went over to like, let's say soybeans, like soybeans is falling off. Soybeans are falling off the board. So yeah, I mean, there's just a lot of selling pressure, not only with stocks, but also with commodities. So not looking good.
Yeah, definitely not good today at all, Mike. And you know, some of these slower moving plays have been doing quite well, like Walmart and stocks like that. I wonder how they're doing today. You know, it looks like those type of stocks are coming up a little bit, but definitely nothing too crazy. I did notice, Mike, that some of the big banks were actually doing pretty bad here as well at market open. So that selling pressure is just continuing to come in, and man, it's definitely getting rough here. You know, I guess Powell's statements last week where he started talking about them raising rates at a faster pace and everything, that obviously the market started falling after that a little bit. So I'm curious if those statements ended up moving the markets more than people thought. But either way, I mean, it's definitely big movement here. The SPY is falling off towards those pre-market lows even. And man, Mike, I feel like last week we definitely were. You know, the SPY was up around like 444. 445. Now we're all the way down to like 420, 421. Like that's a pretty big drop just on Friday alone last week. Like I don't think people really realize the magnitude of that sell-off there.
Oh, I know. It's crazy. It was a rough one. But then it looks like we're seeing some decent movement from AMD on a different note because, like the market obviously isn't looking the best, but AMD doesn't look too bad.
Yeah, it's interesting. They're doing quite well today, and I wonder if they have some specific news. I do see that Raymond James upgraded them to a strong buy from Outperform, and they set a $160 price target on AMD, which is, I believe, right up there at the high. Yeah, it's really close to that all-time high up there. So maybe they can get back up to 160, Mike. That's where they have their price target. But as we know, take all these analyst expectations and everything with a grain of salt. Of course, I'm sure some analysts also expect them probably at 80, Mike. You know, I'm sure analysts are all over the place. So we'll have to see how it goes. But either way, Raymond James has them at 160 and they're moving up. So maybe they'll get some renewed momentum. I know they have earnings coming up pretty soon next week as well, right before the FOMC.
All right, there we go. So I want to talk about Twitter just a little bit more, Tom. This stock has been insane over like the past month or so. It is up 4% today. Okay, it's up 4% today, and let's showcase that news that came out recently. We could see that Twitter shares jumped 4% on reports it could accept Elon Musk's bid as early as Monday. So basically, just to give everyone like a little quick summary, Elon Musk attempted to, or he offered to buy out Twitter. The board said nah, and then Elon Musk was expected to do a tender offer for Twitter, and then he never ended up, or to my knowledge, he never ended up doing it yet. But then it looks like the board is reconsidering his offer, and then if Elon Musk and the Twitter board come to a deal, that should be everything. Then it should be good to go from there.
Yeah, that's pretty big, Mike. And apparently it's saying in this article that they met Sunday to discuss the financing plan for the proposed bid, and that the Twitter's board is kind of, they're, for example, like they were going to adopt the poison pill, and now that they found out that Musk actually had the funding, apparently they're more receptive, according to this article. So definitely sounds big. It sounds like they might get a deal done pretty soon here. And with the reports coming out saying it might get done today, I mean, maybe expect something. You know, Twitter had a big move in pre-market. That's definitely been a big piece of news in the headlines lately, and I'm sure we'll hear something about it by the end of the day. So hopefully something gets done. I really hope the deal goes through, Mike. As we know, Elon's awesome. He's trying to make free speech a better thing here. As we know, a lot of these social media platforms are, you know, they have a lot of moderation on there, and they really don't allow totally free speech. And it's going to be really cool. Who knows how Twitter is going to be in the future? And man, I just can't wait to see what he does. You know, a lot of people are, and he even said he'd like to take him private. So I'm curious to see what he'll do if he ends up getting control.
All right, there we go. On another note, Tom, I mean, it's just, I mean, the Twitter situation is definitely crazy, and I'm very excited to see what happens. Check out that implied volatility on Twitter. It's tanking down, which means the market is expecting Twitter to be less volatile than it was originally expecting from Friday. So we'll see what happens. But what I was going to say is the market appears to be turning around a little bit in a good way. You know, we had the S&P 500 coming up a little bit, but check out stocks like Teladoc or Square or even DraftKings this morning. Like, they're coming back up.
Yeah, they are actually. Teladoc's looking quite nice. It's back up to that mid-range of Friday and almost back up to the high of Friday, up there around 61. So definitely moving back. You're right. My watch list is slowly becoming more and more in the green here. DraftKings is back in the green, up 2.7%. So yeah, we're definitely seeing a nice turnaround, Mike. I knew at market open we were seeing a pretty nasty drop, and I'm really happy to see it turn around like this. Even Unity's coming back. We have Snowflake back in the green, SNOW up in the green by quite a bit, up 4.2% just a second ago. Man, this is insane to see the turnaround here today. AMD still going, obviously. They've been a powerhouse this morning. Mike, I know you've talked a lot about Penn Gaming lately. It looks like they're even coming back up, which is pretty cool to see. I know poor Penn Gaming here has been getting brutalized over the past couple weeks.
Oh yeah, it's been bad for them. No doubt about that. Even Logitech is looking decent today, Tom.
Yeah, it is. In pre-market, I noticed it was holding up pretty decently. Definitely a lot better than that big drop we saw Friday. That was a pretty nasty drop we saw with Corsair there. Pretty bad sell-off. So hopefully these these gaming stocks end up holding up here and coming back, especially with the rest of the growth sector. I think if we continue to see like DraftKings and everything like that in the green, we'll keep seeing those gaming stocks also come back up. But yeah, I mean, I love it, Mike. Asana's even in the green, which is cool to see. I know this one's been a highly talked about lately since Moskovitz dumped $1 billion in it.
True that. Yeah, and what's also interesting is while we're seeing some of these growth plays pop up, check out some of these powerhouse stocks like Apple. That's not really moving. That's actually falling lower.
Yeah, it is. That's actually pretty scary to see. I hope that doesn't maybe hinder the SPY's upwards movement here. But yeah, that's definitely pretty big, Mike. That they're obviously like the biggest company in the market, and that's going to have a huge impact on everything else. I'm sure Microsoft is also, yeah, they're not really doing too much. At least they're not in the red though. They're honestly doing a little bit better than Apple, but they're kind of not really doing much either. So I don't know what's up with these big tech stocks, Mike, but they're just not moving. Let's see, Tesla. Yeah, Tesla's trying to come back. Facebook actually had a nice little pop here at open, so maybe we'll see some of these stocks come back up, like Facebook, maybe some of these other big tech plays, like I don't want to say like Twitter because they're kind of already coming up. Maybe the other social media stocks like Snapchat and other things like that can maybe start to come up if we continue to see this green movement. It would definitely be nice for Snapchat after those earnings last week.
Yep, true that. What else do we have moving? Tom, are you like eyeing up any specific setups or anything like that?
Yeah, SoFi is another one I'm looking at. I've been really eyeing them up. Mike, today I've really been eyeing up those oil plays to the downside. Like ZOM here has had a huge move at market open back down to $80 a share. I just can't believe how much these stocks have ended up dropping today. You can see it looks like they hit a bit of support down here close to 80 and they're starting to consolidate a little bit, but man, that sell-off today at market open was insane. And I just can't believe that these big banks are also down in such a big way. I know they're coming back a little bit here with the market, but still though, like Bank of America is down another 2.5%. We have JP Morgan down 1.2%. And look at the way pre-market went for JP Morgan. It was kind of insane with that weird print down there at the bottom and everything. Definitely not looking good. They're kind of pointing to the downside. And when you look at these banks on the daily chart, they're so far off their highs. It's insane to see them pulling back with all these other, tech stocks like Facebook and everything like that. It's just insane to see how low all of these stocks have become over the past few months. It's insane. And I feel like the market, Mike, is honestly sold off, but then we have the SPY still holding up pretty well. I know the SPY is definitely moving lower, but well, I will say the SPY is starting to get back to those lows of, the beginning of March there, but it's definitely, moving back to the downside in a big way here, Mike. And I feel like the sell-off is becoming a little bit overshadowed by some of these earnings and by Elon Musk's news. It's like, because this selling pressure is pretty big here. And on the SPY the past few days, these are big moves.
Yeah, no doubt. Over the past month to month and a half, we've seen a bunch of obviously downward selling pressure, but even a couple weeks ago, we saw the market explode up in an amazing way, but unfortunately, the market is coming back to that same level. So for example, if we look at the S&P 500 from March 15th all the way up to March 29th, that was an amazing uptrend. And now we're almost back to the level before the market even started running up on March 15th. So that's unfortunate. We're getting close to that support on the SPY right around 420 and 415. So we'll see what happens, but I think the earnings reports from these major companies like Apple, Microsoft, Amazon, and all the other ones will be the deciding factor this week. For example, if these major companies blast up on earnings, that will be amazing, not only for the S&P 500, but it will also set the tone in a way for other stocks in the market. At the same time, if we see another 30% gap down with Facebook and Apple sells off and everything else, that will not be good.
Yeah, it definitely won't. And that's going to be terrible there. And, then we still have to deal with the FOMC next week too. That's going to be terrible. I know that they're going to be probably overly hawkish. And as we know, Mike, the market's pricing in a 75 to 100 basis point jump here on this FOMC meeting. So this is going to be huge. They're even kind of pricing in a little bit of a higher jump than that, but it's not a very high percentage, of course, but man, this expectation of 75 to 100 basis points is just insane. And I know that that's going to be really hawkish for the market. As we know, the market has been kind of falling off as this news has been coming out of the Feds raising rates and stuff. I'm still curious, Mike, if the market kind of already priced this in. It seems like every time this comes out, you would think it's already priced in, but then it still ends up dropping. So I don't
Right.
know. The market's down a lot, but it just keeps selling off with this news. So it definitely has me a little bit worried for next week.
Yeah, makes sense. Makes sense. All right. And then we have Bravo saying, "Hey, Mike and Tom, what do you guys feel about Disney? I mean, it's getting killed. I actually bought Disney today." All right, so let's take a look at it. Disney is a company that I own for the long term. It definitely is getting absolutely smacked right now. There are a couple reasons for this. One, obviously, Netflix's subscriber loss has people feeling uncertain about Disney's Plus subscriber numbers that they're about to report. Another thing is basically all stocks are tanking off the board. Another thing is they had some really bad news with them related to their special district status in Florida that will potentially be removed. So that's also not good for them. They report earnings in like a week or two, which can be really good, but could also be really bad. It's at a. I will continue to own it for the long term. Short term, anything can happen. Considering how the stock market is moving, considering how their earnings are, especially their subscriber growth for Disney Plus, and then of course any other updates that come out of Florida. So short term, it's so predictable because there are like three extremely important events going on with the company right now, and there's no way to like accurately predict all three of those.
Yeah, exactly. And the earnings might go well, but as we've been seeing, Mike, even if the earnings go well, this other news might really take it over. I know that news with the Florida bill has been pretty big, and even the special district. So I'm not sure what's going to happen with Disney. That stuff with the Florida bill has me a little worried, Mike, because whenever you get a little bit political, of course, everybody, like we've seen some selling pressure in the past because of stuff like that. So I hope that doesn't come in for Disney. But as we can see, the past week, it's definitely been falling off to the downside. I will say, Mike, on the long-term chart here, I think it looks pretty great. Like if we go to a max daily, they're back to those lows like whenever they had that bad COVID drop. Obviously they were down below $100 too, but even up here like 117 to 120, that was a pretty big area for support there. So who knows, maybe Disney will end up holding up around here and they'll end up going back up, especially if some of these other earnings maybe do well. I think they could see some nice uptrend, but I really like them, Mike. I think they'll be pretty good longer term, and I know that they have a lot of big shows and stuff coming out, so I think they can definitely turn it around this year eventually. It's probably going to take a while, and obviously, the feds are playing a role on it too.
All right, there we go. So yeah, I mean, good question, Bravo. It should do fine long term, but we'll see what happens. On another note, Tom, we have a lot of selling pressure continuing to come in with companies like Facebook. Check it out really quickly. Facebook is down only 0.5%, which obviously it's not a ton, but over the past, what would you say, like 5 days or so, Facebook has really, really been selling off. Like 5 days ago, this stock was almost $220. Right now, it's close to 180.
Yeah, it's insane to see the movement with Facebook. I never expected them to fall off back down this low. Like, I knew whenever they were rising, Mike, and they went on that crazy uptrend with a few other stocks, I figured maybe they would end up holding somewhere, maybe around 200 or like 215 or something like that. But they just continued to fall lower and lower. And you're right, the past 3 to 5 days have been really brutal for them. They're honestly holding up okay today, but I mean, they're still in the red, and it's definitely not looking the best. I'm not sure where they're going to end up today. I mean, I would say they're probably just going to go flat and just stay around where they are, but, anything can happen with a stock that's like this. What I do like, Mike, is like if we go to the 180-day, 1 hour chart here, you can see that I know that they're slightly below, but they're still pretty close to this major support. Who knows? Maybe they could end up holding this. They do have earnings in only 2 trading days, so they're really close, and that IV's rising. So I don't know how Facebook's going to go, Mike, but it's definitely had a lot of bad selling pressure, like you said, and I'm really worried for those earnings because if they end up going bad and we see another move kind of like Netflix back to the downside, that's not going to be good. I'll be honest, Mike, after Netflix had that 30% drop last time, I never expected them to have another one here, but it's definitely a possibility. But I will say, I think Facebook's a little bit better than Netflix. I don't think Netflix is is quite as good as Facebook as far as like solidarity. Keep in mind, Netflix also lost a lot of subscribers because of that Russia situation, which was also bad for them.
Alrighty. So yeah, I mean, I know. Yeah, I know what you mean. So we'll see. I know a lot of people are kind of looking at Facebook and seeing how they tanked off their most recent earnings report, just like Netflix, and they wonder if they're going to see the same thing with Facebook that we saw with Netflix. But like you said, Tom, like they're kind of like different companies. Like I would say, if anything, people should be like more worried about like Disney with Disney Plus, considering Netflix actually ended up losing 200,000 subscribers, where Facebook there isn't really like a comparable option for that, but we will see. It's going to get volatile.
Yeah, it's definitely scary because I know I'm someone who's scared of that big drop coming, and man, I really hope it doesn't happen. But with us breaking below supports and stuff like that, it's definitely something to always keep in the back of your mind. Anything can happen with these stocks, as Netflix showed, and it's just it's rough with earnings. Sometimes they do well, and the stocks will fly up 30%. Sometimes they'll report underwhelming subscriber growth and they'll fall 30%. It's crazy. That's obviously why it's always a coin flip and why it's almost impossible to play earnings. And Mike, like last week with some of those big drops on Netflix, some of those puts, remember you said they were going from like $23 up to like $2,000 and stuff like that within just like a couple days. That was pretty crazy.
It was like within a day.
Yeah, within one day.
Yeah,
I think it happened like right on an expiration day too, didn't it?
I can't remember. I forgot. I don't know. Either way, it was insane though, and while that's awesome, you just got to be careful not to get sucked into the earnings trap, especially when IV's already so high on a lot of companies.
Yeah, I mean, that's a really big deal because, everyone wants to trade that stuff and it's really easy. Everybody thinks to themselves, hey, we have to trade these earnings plays. We can make a lot of money. We can turn $100 into, $1,000 or $2,000 or whatever it is. Like everyone's always chasing those really big gains there. But what they don't realize is that if you have a bunch of small gains, it honestly adds up. Like if you can get a lot of 5 to 15% on options, it can work out pretty good a lot of times. And
yeah,
I know everyone wants to chase those big 100% plays and stuff like that, but as we've learned, Mike, selling puts and stuff like that, or maybe you only make 5 to 10% of your total position size is still pretty good. So
yeah.
It's still pretty good, and those plays add up over the course of time. Like if you lose on 3 to 5 earnings plays, and then, over that same amount of time, you might have been able to, over the course of 3 weeks, play a few cash secured puts and maybe, come out with a few $100 extra rather than taking those losses there. And that stuff really adds up over the course of, a year or two.
Yep, very, very true. And like another thing too is like, let's say we look at Netflix really quickly. Like obviously we all know that the stock tanked and the puts printed, and like you said, like the puts went from like $30 up to $2,000 or whatever it was. While that is true, that only happens like one in every like 200 like events. You know what I mean? Like it's like a very rare event, and that's why the returns are so crazy. So like the other 199 times, it's like you don't get anywhere close to those crazy pops with the options. So definitely a good topic there, Tom. And I don't mean to change topics, but I did want to point this out really quickly, and that's how Apple appears to be basing off. And, I know it was just at its low of day, but it looks like it's not going down without a fight.
Yeah, it's definitely not here. It's holding up quite well, actually. I have a bit of support printed here down around 159 to 160. Who knows? That is like an even level here, so maybe we'll end up seeing a bit of a move back to the upside. I thought the SPY was coming back up a little bit earlier too. Yeah, it's kind of coming back now. It has these like little candlesticks where it's like extending up, but it's not really going anywhere. You're right though, Apple is definitely not going down without a fight, which is kind of cool to see here. What are some of the other bigger stocks? Like I know Microsoft, Facebook, Tesla. Facebook actually looks like it's doing quite well. Tesla's coming back up with Apple there. So, some of these bigger like FANG stocks, Mike, are doing pretty good. I'll take it. I'll take the good movement here. Amazon's even trying to pop back, so it looks pretty decent. I know Amazon last week, Mike, fell below $3,000, and that was a pretty big price point for them to break below. So I hope they end up holding up here. But I know their like max daily chart, Mike, has been brutal. Like they have not been breaking out or have had like they haven't had any type of good movement for almost the past year and a half. Like they've just been stuck in a huge range.
Interesting. Yeah, that is true. Like Amazon has been so stagnant for such a long time. Like I feel like it's hard to find setups like this one. Like whether you're looking at like a major tech stock or you're looking at a value stock or even a growth stock, I feel like none of them are in the setup that Amazon is. Like it's literally just it's been flat for, you said, a year and a half, Tom?
Yeah, I mean, a year and a half. Honestly, it's almost 2 years now at this point. I mean, it's a long time. Yeah, pretty much 2 years. Once we get to June, it'll be around 2 years. So it's definitely been here for a long time. And like you said, really flat. The only thing I've seen that I've personally seen that's semi close to it is Walmart. But Walmart's been breaking out lately, so at least they've been having good movement where Amazon's been kind of falling back down, believe it or not.
Yeah. Huh. Interesting. I know that they have that split coming up in June, right?
Yeah, they do actually. I think a lot of people have forgot about that lately with all the big news going on between Elon and everything like that. But yeah, they announced that. I believe it was the last earnings report, but yeah, they made that announcement and the stock hasn't really done anything. So maybe it'll get some hype, maybe like a few weeks heading into that event. Like I said, it looks like they're scheduled for that on June 6th.
All right. Sounds good. We have Keisha saying CrowdStrike in the green. Let's see. CRWD. Yeah, it's looking pretty good.
Yeah, it really does, actually. It's having a lot of good momentum today. Mike, they honestly got really close to $200 even here. So that's a pretty big level. It even looks like on the chart that's been pretty big in the past, even as a support. So that's cool to see there. Maybe they will start to pop back up here. I mean, it's up quite a bit today. It's already up 3.3%. It looks like they are coming up to a resistance around 215. So that might end up holding up. But Mike, it's had great movement today, and I'll tell you, like on the daily, that's a pretty good turnaround candle. So maybe we'll see a bit of a continuation tomorrow out of this. I really hope we do. It seems like this stock has had some pretty good runners lately, so maybe it'll end up running back to the upside. It kind of looks like a setup, kind of like end phase to me.
All right, sounds good. And then Sean mentioned UPST, Tom. UPST is looking really good today. It's up 5.5%. It has a lot of momentum. IV is blasting with this one too, which is good and bad. It's like it's running up and it is obviously volatile, and the market is expecting it to be even more volatile, which is good if you're looking to day trade it. But the con is that the options are becoming more expensive too.
Yeah, they really are. Every time we see that IV jump in, those options are getting way overpriced, especially like when you're at 150%. That is one of the unfortunate things I've been seeing, Mike, is that a lot of these stocks are really low, and it's making for some good like longer term leap plays and different stuff like that with options. But then the IV is so high that it's kind of making it hard to justify. So it's hard to find some well priced chains here to get into. But yeah, I mean, Upstart's another one of those plays like where the IV's flying up above 150%. It's definitely back on the move here, and it's weird to see it rising with the stock, but hopefully they keep going up. If they do keep rising, it'll still make for some good movement. There is resistance coming up around $80 intraday, but yeah, it's had a lot of great movement today, and it looks like it's been trying to form a good support down here. So maybe they'll end up popping back up soon.
All right, there we go. What resistances are you seeing with this one if it breaks out above like today's high?
Yeah, so today's high is like really close to 80. It's at like 79.40, 79.50. It might run up to 80 and then, obviously see some resistance there too. But the main thing I'm seeing up above here intraday is up around like $82.50. There's been a lot of hits right around there the past few days. So I feel like that could be a pretty big intraday resistance if we do break 80. Keep in mind that's not going to be too crazy of a move, but they'll be up quite a high percentage if they run up to 82.50. So definitely watch for that. Obviously higher than that, I see another one at 86 and then another one at 88. So there's definitely some big levels coming up, Mike. A lot of big resistances, but as we know, these growth stocks have been getting beaten down. So when they do start coming back, expect them to start roaring back up. And I would say if we continue to see the other growth stocks move today, Mike, I think this one could come up and touch 82.50. I don't think that's impossible for Upstart. They're already up 3.3%, but keep in mind, even if they end up rising 10% today, if we go to that daily chart, they need a long way to recover.
Yep, very true. All right, so we have Bravo saying, guys, I have a point. Thinking about this dip in the market, do you think this is a buy? I think so. Because last time we dropped was the Ukraine war. This drop on Fed's hawkish isn't really concerning. I mean, Feds will try not to put us into recession. We need interest rate hike, but we don't need a recession. I think this is a dip buy, IMO. All right, so I think it's a buy for the long term too. The biggest thing I want to emphasize is if you're willing to hold long term. For example, if you look at any stock in the market right now, whether it's Apple, UPST, Facebook, Netflix, DraftKings, Zoom, anything out there, if you buy the dip, you have to have the long-term mentality. So, for example, don't dip buy Zoom right now, and then if it continues to fall another 10 or 15%, try and sell out, because that's just it's not a smart thing to do. Like, if you're going to make a decision to invest in or buy the dip and hold long-term, you have to do that. So if you're willing to hold long term, I do think it's a dip buy opportunity across many different stocks right now. Raising or increasing interest rates, it normally brings in fear, like we're seeing right now, into the market. But the market has popped up significantly in the past, even in rate hike cycles. So a lot of people instantly think, oh, it's the Feds are hiking interest rates, the economy is going to crash and burn and blah, 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 blah. But it's better to tame inflation now and hike interest rates than have the U.S. go into like a, hyperinflation type environment and then create a way worse problem down the line. So to answer the question in like a short summary is, yes, I think it's a good dip buy if you're willing to hold long term.
Yeah, I do too. A lot of these stocks are at great levels, like Zoom, DraftKings, stocks like that. Like Mike said, though, it's very important that if you do decide to pull the trigger here, like he said, if they do end up falling down a little bit more, just don't get too worried about it. You're in for the long term, and you'll just have to hold through this downtrend. Obviously, we might go on like a short-term downtrend with the Feds being hawkish and everything like that, and we might go down for a couple months, but who knows? Maybe by the end of the year, we might be back up. Sometimes those recoveries happen pretty quick. Even like whenever COVID happened, of course, that recovery was especially quick. But, like even if we go back in history, Mike, like to other dips, like even 2008, for example, it took a while to recover, a couple of years, of course, even on like the SPYs case, but that's not too bad considering the drop that we really had there. Like I'll take that recovery any day of the week. You know what I mean? Like that's fairly good, and the market generally comes back. So as long as you're willing to hold, I think it's definitely a good time to get in as well. Just you have to have that long-term mindset. Don't get worried, because chances are, it's impossible to pick the bottom. That's another thing. It's almost impossible. Not even the big hedge funds and stuff, like for example, buy perfectly like on these big dips and stuff like this at the exact bottom. So keep that in mind. You'll always have to hold through some type of downwards movement, whether it's a little bit or a lot. It'll probably end up coming back as long as it's a growth stock. And keep in mind, make sure you're comfortable with it. Like if you're someone who doesn't like something like Twitter, for example, then, fine. If you're more into the solar stuff, then make sure you get stuff that you're comfortable holding, because if you're not, then that might hurt you later on, because you might see it selling off and get worried about it and then, kind of get rid of it at the wrong time. And I don't want to see anything like that happen, of course. And just make sure you like it, because there's so many stocks out there. And Mike, as you know, not all of them are going to recover. So it's kind of tough picking them. And, the dashboard's been coming in handy lately. I've been using it nonstop to eye up some of these plays down here. And like we always talk about, Mike, Zoom is looking really good. That's one of my favorite ones.
Yeah, there we go. Yeah, I mean, especially with earnings, Tom, now's a good time to be looking at fundamentals, whether it's with a growth stock, value stock, or anything else, because at the end of the day, especially in a market where interest rates are rising, fundamentals are very, very important. And like even with Netflix, like I know that obviously they lost subscribers in this past quarter, And it goes to show you that, they were trading at a very high multiple for a long time. And even though that their revenue and a lot of their other metrics were good, it shows you the importance of, just like fundamental growth. You know what I mean? When I'm like, for example, like, Netflix was growing at a very extreme pace for the past 10 years in terms of revenue and subscribers and assets and everything. But right when that subscriber growth starts to stall or even go negative like we saw, people are willing to pay a less premium for the company because the growth is slowing. So long story short, fundamentals are very, very important.
Yeah, they are. And like you said, it's especially big now with all the big earnings coming up and everything. Like, look at all these stocks reporting the next couple months. Not all these plays, Mike, are going to do the best. Like, I'm sure Robinhood is probably going to have some issues. I hope they don't. I hope they end up coming back. But as we know, not all these plays are going to do well. Another one that worries me a little bit is Uber down here. That worries me with like the cost of oil and everything like that going up. I think that one could be a pretty crazy earnings report. Same thing with DoorDash. I think that'll be a pretty big one. Shopify. We obviously have DraftKings next week too, Mike. I kind of forgot about that. Next Friday, we're going to have DraftKings reporting. And next week, we can't forget on Wednesday, we're going to have that big FOMC announcement there. So that's going to be huge for next week, obviously. That might even overshadow some of these earnings, Mike. But man, I mean, these earnings this week are huge. I mean, we have Apple, Amazon, Twitter, Intel, Roku. I mean, tomorrow we even have Microsoft, Google, UPS, Visa, General Electric, even General Motors. And Mike, I even saw some good news with General Motors today where they were going to start doing some electric Corvettes, they said.
Huh. Good stuff. All right. What else? Bravo said the other question. He said the other question, which one was worse shock for the market in your opinion? Ukraine war when it happened or this drop on hawkish comments? I'm taking Ukraine more reason to drop, so I can actually see us making higher lows here, but whatever. All right, he said, so what was worse shock for the market in your opinion? Well, I feel like the rising interest rates is more predictable, considering that was what was needed for the market. In the short term, that has brought a ton of shock to the market, as we've seen over the past 3 to 4 trading days, especially. The Ukraine situation was a lot less predictable. I know there were some warning signs and there were things like that. But the whole situation between Russia and Ukraine, really only Putin knew what was going to happen, if he was going to invade or not. So that's my answer. So yeah.
Yeah, I kind of believe that too. I'm kind of on par with you, Mike. I believe that the Ukraine and Russia situation did cause some volatility in the short term. For example, for a few days, I feel like that it made the market definitely go down whenever we were in the very beginning stages of that conflict. But now I feel like the market is starting to fall more based off of the interest rate news and stuff like that, obviously, especially as we're getting closer to the FOMC meeting. And we just keep seeing an uptick in expectations. Mike, we just keep seeing these numbers changing to the upside. They're just expecting more, I guess, a bigger hike, obviously, a higher basis point hike there. If we look at the bottom here, 75 to 100 basis points, Mike, is big. And now they've switched the next highest one to 100 to 125 basis points. So it's just insane. I think this is obviously having more of an impact on the market overall. Like I said, I think the Russia stuff was more short term. I think that the market is really worried about rates going up right now. But the main thing is that they have to go up. We can't keep that easy policy forever. It's just that at the same time, the market also over recovered. So on a price action standpoint, the market just almost has to give some gains back, especially on the SPY. It's just gotten so overextended. I just, you know what I mean, Mike? Just on a price action standpoint, from the low of COVID up to the recent high at the beginning of this year, let's see, the SPY was up 118.5% over the course of 2 years. And if we go from the pre-COVID high, right around I guess we could say right around 340, really close to it, up to this high again, that's another 42% increase over just a couple years. And Mike, as we know, the SPY is not supposed to average 20% a year. So whenever you see this, I mean, it's just we've been seeing some pretty crazy upwards price movement, and it's going to cause some downwards movement now that this policy is changing. But I just think it's kind of normal, Mike. You know, the Fed does these different type of rate hike cycles, as we've seen in the past, especially after they had to implement that easy policy. And we've seen this happen before. You know, it might dip for a few months, but I think we'll be, you know, right back steady just as soon as the market, maybe like, for example, maybe for the next few months, we might continue a little bit of a downtrend, but I feel like we'll end up coming back pretty well once the Feds start getting a little bit more dovish. You know, right now they're obviously raising rates because inflation's just getting too out of control, guys. Like it's such a weird cycle that they do. And there's so many different scenarios in history where they've done stuff like this. So it's definitely not anything crazy. And like I said, I think it's just normal price action to see the market down a little bit.
Yep, I agree. And then another thing too, for what it's worth, is Tom, can we go to like a chart of the S&P 500, like maybe intraday, or maybe like an hourly chart or like 2-hour chart, something like that. And let's go to February 24th, okay? February 24th was the low for the SPY for the year, and it was also the day Russia invaded Ukraine. So back to that point is, obviously, it's not like things in the world have gotten better since Russia invaded Ukraine. Like, a lot of bad things have happened, especially in Eastern Europe, right? But that was the market low. Why was that? That was peak fear. So whether we're looking at the overall stock market, whether we're looking at an individual company or anything else, a lot of times the moments of peak fear can end up being the bottoms / tops. Like the tops would be like peak euphoria, but it just goes to show you that the market won't necessarily find a bottom when the Feds stop raising rates. They will likely find a bottom when the market says, oh, this actually isn't as bad as I thought. You know what I mean? So keep that in mind too, because it's not like the market bottomed and Russia said, oh, never mind, we're not going to invade. They've been going harder ever since.
Yeah, they really have. And, you know, the market did end up recovering off that. So that's a really good point. You're definitely right there. Like that, like them stopping raising rates is not just going to make the market come back up. That's a really good point there. But at the same time, I mean, SPY's falling off big right now. Mike, I know you pointed out that low there on February 4th or February 24th. I really hope we don't get back down to 410 here. Honestly, if we retest that, I won't be too upset. But if we start to fall below 410 and then start to fall below 400, it's going to start to look pretty brutal for the market in the short term. And man, I really hope that maybe the market turns around. I will say, Mike, like in history, whenever Yellen was raising rates like a long time ago, I remember one time, Mike, and now keep in mind, there was a whole bunch of different scenarios and different things that went on. But I remember one time they raised rates and the market went up and everybody was like, what, how, that's impossible. You know, that can't happen, blah, 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 you know, because everyone's always worried about the market going down with whenever they raise rates. But the thing was that they were raising rates to protect the market, you know? So,
right.
So at the same time, then the market reaction was good rather than bad. I remember, Mike, I learned my lesson with that on futures early on. You know, yeah. I had a big position on /ES, and I remember, man, whenever they announced that position turned around and at like just a couple hours, you know, it was probably negative like 10 grand or something crazy.
Yeah, for sure. No doubt. Just doing a couple different quick scans to see some of the price action today. What I do think is a little bit interesting, Tom, is how we have the market down 1.25%, but we are seeing some of these growth stocks in the green. For example, Square's up 3%, Fiverr's up 5%, Penn's up 3%, Upwork up 2%, Logitech up 1.5%. So, you know, that's a decent sign, but then again, these growth stocks have been falling a lot more than the S&P 500 has.
Yeah, they have. I definitely see what you mean there, but it's still good to see him green. I mean, yeah. I'm happy at least. I'll definitely take it. It's better than them running back down into the red with everything else. So I'll take it. You know, not all of them are coming back. I'm noticing like some of the ones like Roku and stuff like that are still kind of down in the red, which is a little bit unfortunate for them, but they're not looking bad. They did have a little bit of a pop at market open, so they could always end up coming back. And some of these plays, though, Mike, were actually looking pretty decent. Like you mentioned, Penn, for a while there, they were really popping up. It looks like they're trying to get some more momentum back to the upside right now. Doesn't actually look too terrible there. I know Snowflake has had a lot of momentum this morning. They're coming back. So, yeah, we have been seeing some pretty nice moves, actually, and I'm happy that they've been turning around. It's definitely better than what we saw on Friday. Man, ending the week last week, Mike, I was pretty sad. It kind of ruined the weekend for me, but hopefully this week goes a little bit better with these big earnings. I think that'll definitely be a help if some of the growth plays report good numbers, but I'm not too optimistic given what we've seen so far.
Yeah. All right, we have Iranical saying Goog is going up. Let's take a look. Goog's not doing bad, Tom. It's up like almost 1.5%, and it's coming off of a pretty decent drop. And it's good to see, Google holding up because it is one of those major tech stocks.
It is. I'll tell you what, Google has been really selling off, Mike. I'm glad to see it coming up today, but man, look at this daily. They're coming back down. But I will say, kind of like what I said with the overall market, Mike, some of these stocks are just up so much that I feel like that they just have to give some gains back, even for the sake of price action. I'm sure some people are going to sell out after this nice 100% pop over the past year or two. It's pretty insane to see how much some of these stocks are up, especially Google. But yeah, it's coming back down. It's at a major support close to 2,400 there, Mike. So who knows? Maybe it'll end up holding up here. I know they have those big earnings coming up soon, and man, if they report good numbers, I think they could come back well. And they have YouTube to worry about too, so that's going to be big for them. They also just have their regular ad revenue and everything, so they even have a lot of cloud stuff. So I wonder how they're going to end up reporting, Mike, and it's coming up really soon. So I guess place your bets now, everyone. No, I'm just kidding. It's going to be risky as hell.
Yeah, it's going to be very risky. Plus, IV's popping too. It's like IV over the past couple weeks even almost doubled. I'm actually curious. So hold on. So 2,400 it's at right now. Earnings, like I said, or like you said, coming up very soon. And then the weekly chain, 2,400. Holy crap, Tom. Google's expecting almost like a 200-point swing just for this week. So that's pretty big. So it's like it's around 10% just for this week.
Yeah, that would be big. I will say, though, it's probably because of how much they've fallen lately.
Yeah.
It was pretty crazy. They did fall 200 points in the last two trading days last week on Thursday and Friday. I'll give it that, but that would still be a pretty crazy move. I think it'd be nuts if they ran back up to 2,600 or if they fell back down to 2,200. Man, that would be really crazy to see them fall down like that. But, oh, yeah, hopefully the earnings come in better, Mike. Like you said, that IV's rising, and they're definitely expecting a big move here. So I'm curious to see what happens. But the main thing is it's just going to make it super hard to play those options. It's going to be almost near impossible with them expecting that big of a swing. If we end up just staying even around 2,500, who knows? Those calls might end up losing.
Yep, very true. All right, Tom. Well, do you have any last-minute plays you're watching?
I will say I'm keeping an eye on DoorDash. I know I mentioned it a little bit ago, but it is coming up pretty well today. It's holding up decent. It is having a red candle over the past 5 minutes, but so far this morning, it's been coming up in a pretty nice way. So I'm definitely keeping my eyes on them. I've also been eyeing up Pfizer and Moderna. Moderna is moving a lot better than Pfizer is today. I know they had some momentum earlier, so I'm definitely keeping them on the radar as well. But yeah, Mike, the main thing I'm really going to be watching today is Twitter. They had that good news this morning where they said that there might be a deal between Musk and the board today. So I wonder what's going to happen. But man, they said they might expect something. So this is going to be the main thing I'm looking at. It's had a lot of great movement lately. And that IV's actually dropping, which is pretty crazy. But Mike, what I'm kind of starting to theorize is, how Activision has been not moving at all because they're getting bought out by Microsoft. I wonder if something gets announced with Twitter and Elon, if it'll just kind of consolidate around whatever price he decides to buy at. I think they said somewhere around $54. So I would almost expect it to go kind of flat. I'm sure a lot of people expect it to explode, but Mike, like if he's buying it out, I wonder what it's going to like, how the price action will even go, or if it even continues to trade after that. Because, if a deal gets done, I wonder what'll happen in the short term.
Yeah, that's true. Like at the end of the day, like if Elon says, "Hey, I'm buying out Twitter for $54.20 a share," and the board ends up accepting that offer, or like let's say the board negotiates, and let's say that he ends up having to pay $55 per share, it's like it's only going to go up to 55, and right now it's at like $50.50. So it's like keep that in mind, and I'm glad you brought that up, Tom, because it'll only go as high as Elon's willing to pay that the board accepts.
Yeah, because I think everyone's been kind of expecting lately, like, hey, if this deal goes through, Twitter might, 100% overnight or something like that. But, keep in mind, he's going to have to buy it for some type of price. And that's going to probably be the, deciding factor in how the stock moves. And I know that sucks because I'd love to see it, get some awesome momentum. But I have a feeling, Mike, that's going to definitely end up playing a big role here.
All right, sounds good. Well, before we close out, I just want to thank all of you guys for joining. So thank you, George, Hunter, Keisha, Sup, Sean, Bravo, and let's see, Raymond and Iranical. Thank you guys so much for joining today's stream. The market is looking decent so far, but we're set for a ton of volatility. So again, thank you guys so much for joining, and have a great rest of your day.